Google Hangout in a series of 4. If you have any question about this Hangout or about the Triple Impact Competitor Scholarship, please feel free to email me at Sonja, S-O-N-J-A, @positivecoach.org. Our next and last Hangout will be dealing with creating a professional image. So everything you need to know about resumes, job interviews, and generally life after college. There's also a big piece about appropriately using social media and what you need to be aware of in this modern day and age. It will take place Tuesday in 3 weeks, November 18th at 6 p.m. Pacific Live, or you can also watch the YouTube video at a later point. All of these Hangouts can be viewed on YouTube at any time convenient for you. I will continue to email out the links. Please find the time to review them because we think they would be really helpful for all of you getting ready for the next phase in your life. I would like to thank Deloitte, which has been a sponsor for this program for the past 4 years, and we would not be able to offer this without their support. We will start the presentation shortly. If you're using your Google Plus account and are watching this live, you can click on the green Q&A button on the left of your screen to participate and ask the presenters any questions you may have. I would like to introduce our guest speakers for tonight now. We have Tania Adams and Dominic Maldonado, who both work for Deloitte. They will tell you a little bit more about themselves in a second. This is their 3rd time presenting to this group, and we hope you find their presentation helpful. Dominic, take it away.
Okay, great. Thanks, Sonja. So again, my name is Dominic Maldonado. I'm a tax partner out of the San Francisco office. I serve clients in the financial services space, which just happens to be pretty beneficial, just given the topic of this Google chat, but Google Hangout, I should say. But I want to say again, thanks for listening on and watching on. I think it's something that's very worthwhile. I can remember when I was a student that the importance of a financial aid, being smart about personal finances, and how to think through that. Being a college student, especially for those that don't have a job right away. And then just a little personal tidbit for myself. Married, I have a little 11-month-old, so it's a lot of fun. Definitely adds a lot of excitement to the day and nights. But anyways, again, thanks for joining, Tania.
So welcome. My name is Tania Adams. I'm a director in our San Francisco office, and the group that I'm in is called Cyber Risk Services. That group is all around, vigilant and secure for our clients. So I specialize in the healthcare provider space, and so, a lot of health plans and providers, hospitals, we serve those clients on the security. And I've been with the firm for a long time. My personal tidbit is I have 2 boys, married with 2 boys, both 6 and 10, very active in sports. So our weekends we spend running around with them, playing football, soccer, and then baseball in the spring. So Dominic?
Okay, great. So we're going to move on here. We've got a little slide deck for all of you that you can follow along here. But basically, talk about goals for the discussion and what we're going to cover here, and specifically some of the questions that we're going to answer. But really the goal here is to make sure that you're equipped as much as possible in managing your own finances as you enter college. Again, being a student and going in and not having necessarily a source of income can be a little bit nerve-wracking, just given the cost of an education, all the normal expenses that go with it. So some of the questions that we will focus in on in terms of reaching that goal of being better equipped or well equipped is, what should you be thinking about financially as you enter college? What are some of the aspects that are all involved, and specifically what should you be focused in on? What are some of the common scenarios for college students that you should be aware of, and how do you navigate through that? Along with, what are some of the tax benefits to being a student? Many folks don't realize that there are favorable tax provisions in the Internal Revenue Code here in the U.S. that when you file a tax return, you're actually able to claim some benefit that could actually result in a refund depending on the facts and circumstances, something that, again, is really tax motivated to get students to go to college and to get that higher education in order to help pay for some of that. So there's a benefit there. Okay, so we're going to start out with talking a little bit about a checking account. Now, the importance of a checking account, when you think about it, for those that have never had a checking account, it's really a great opportunity instead of putting cash under a mattress or in a drawer somewhere. Basically, an opportunity to build up an account, accumulate cash, so that you can use it for various purposes. And so, but at the end of the day, the real big purpose of the checking account is really making sure that, again, you're saving and you're using and spending that money wisely. So how do you do that? How do you know what things should you be doing if you decide that you are going to open a checking account in order to basically deposit cash that you can have on hand? Some of the important things to do is balancing your checkbook. You want to make sure that at the end of the day, at any given point in time, either before or after you have to pay your quarterly tuitions or semester tuitions, room and board, books, other expenses, etc., you want to make sure you know how much you have in your checkbook. The last thing you want to do is write a check that basically is no good. You want to make sure that you figure out what your finances are at any given point in time so that you know how to spend it wisely. You also want to make sure that you understand deposits in transit and checks outstanding, meaning if you've got a check that you've already written and it's going to reduce your balance, that you know that's going to happen. One of the easiest things to do that a lot of people, frankly, I do this all the time actually, is online banking. It gives you pretty much immediate access to your account so that you know at any given point in time when you have checks that have been written and that are actually hitting your account. But those times where you've actually written a check where it hasn't actually gone through and hit the account yet, you want to make sure you're considering that so again that you don't overdraw on your balances. And then again, using a check register, kind of an old school way of doing it is to make sure that you're balancing your checkbook, that when again a check is in transit or outstanding rather, or deposits in transit hasn't been immediately accounted for in the account, that you're balancing that checkbook by using a register, all of the inflows and outflows. But again, I would really recommend online banking because it really is a great way to check your balance. In terms of some other things to consider, establishing new routines, and basically what that's getting at is making sure that you get into the good habit of accessing your checking account when you need to, following through on that. Again, leveraging online banking as we talked about, but then also consider as part of a new routine or getting involved in making sure that you're accumulating some excess cash for different reasons, and we can talk about that in a little bit as we go along here, is starting a savings account. It's really an opportunity to build some additional wealth, if you will, at least for now, for a rainy day. So there could be a time, let's just say that, gee, your checking account's running low, but you've saved up enough cash for other business reasons, or not other business reasons, other school purposes, or other reasons that relate to school, that you have that as kind of a buffer. It would be nice to have that in your checking account so you have immediate access to it, but at least in the savings account, you have something that you're storing away for a rainy day in case there are any emergencies that come up. So, anything you want to add there, Tanya? I'm not sure. I know I've been kind of jumping around between the bullet points, but any comments that you have on the checking account?
Yeah, only thing I would reiterate, and you covered it already, and I'll probably cover it later, is the last item: start a savings account. So it's so important for you to start establishing how you save your money early on, because it will pay you dividends later in the future. That's something that I wish I would have done earlier on in college, and thinking about starting my first position after college is just make sure that I have a good strong savings account and a strong savings process.
Great. So the next slide, we'll talk about tax returns. So something near and dear to my heart and what I do all the time, tax returns. And so when you think about, for those students that are looking to essentially work while they're in college or to put themselves through college, you have to be mindful that now you will be experiencing the joy of being a taxpayer. So you'll always hear the comment, there's always two things that are certain in life, taxes and death, right? So taxes, everybody has to pay them. So you want to be mindful of what you need to do as a taxpayer in terms of filing annual tax returns. So the key things here are, really it boils down to when must you file this tax return? April 15th of the following year. So if let's just say you're working, say in calendar year 2014 while you're going to school, or let's say calendar year 15, then you'd have to file a tax return reporting your income if you meet a certain threshold, which I'll discuss in a moment, by April 15th of 2016, the subsequent year. The filing thresholds can be a little bit low, just depends on how hard you work and your earnings, but essentially, if you're single, the threshold for actually filing a return is $10,000, and then it's double that if you're married filing jointly. And there are simplified versions of the tax returns that you would file, a federal and a state. Let's just say if you're a resident in California, you'd have to file a California return. But the gist is there are easier versions, not the less complex if you're not claiming certain deductions and credits, to file these tax returns. So I remember when I was a student, when I was working, I had to file an actual tax return. I could actually write it out by hand and do it. You just simply follow the instructions, and it's relatively straightforward. But something you have to be mindful of if you meet these filing thresholds. And keep in mind, it's something you can do on your own. If you don't feel comfortable, you're not sure, there are many opportunities, particularly on campus, to get some tax assistance, sometimes even for free. And tax aid is a big one. It usually comes around close to that April 15th due date time frame, where you'll get a lot of tax professionals will go out on campus and they'll provide tax return services for free, particularly for students, because when you look at the last bullet point, there may be opportunities to claim credits or deductions on your tax return or even your parents' tax return for qualified tuition costs. And the difference between expense and a credit is really a tax credit means you get a dollar for dollar reduction in your tax liability and potentially even a refund. So we listed here kind of the three big ticket items in terms of some opportunities: tuition and fees deduction, so certain costs associated with the overall tuitions and fees for the quarterly and semester fees. There's a possible earned income credit. If you're going to school and you have a certain amount of income, you may generate a credit back, so you'll end up paying less tax just because of the amount of earnings that you make as a student. And then there's also a tax credit, American Opportunity Tax Credit. You can, again, get a potential refund of up to $2,500 to help you pay that towards your tuition, room and board, books, etc. So there's really opportunities here. But again, the key thing is just know that if you're working, you may have a filing requirement, but I would suggest that you use tax aid, because it is definitely a worthwhile service that they can do for free, and they'll have quite the expertise. Okay, next slide. So for student loans, this one's a big one, just because there are a lot of opportunities to get financing, again, money in order to pay for tuition, books, and room and board. So the key thing to know about loans is there's all different types of financial aid in the way of loans. Some of it may be subsidized, and some of it may be unsubsidized, meaning some of it may be an interest-free loan by the government, meaning you can borrow the money in order to essentially invest into your college careers, paying the tuition costs, etc. But you may not have to pay interest on the loan, so long as you pay back the loan over a certain installment period after you graduate, for example. So that's an example of a subsidized. So there's different types of loans that you can look at. One may be a private loan, so you could always go out and try to borrow money from a bank or a third party. Again, you have to consider what the costs of borrowing. Again, that's interest. So some loans may require a 5% interest rate on any amounts that you borrow in order to essentially pay back the lender for the use of that money. So you want to understand the terms of the loan. How much is it going to cost you? What are the terms of paying back that loan? Is it immediate? Is it when you graduate? Is it stepped up over periods of time depending on how much money you make? Are there any clauses in there that if you miss a payment, all of a sudden your payments are ratcheted up in order to catch up? So you want to make sure that you have a good understanding and feel for what the terms of the loan are so that you feel comfortable that you can pay that back once you are actually employed. So planning ahead, again, just thinking about, and I talked about interest, you may have some fixed or variable interest rates on student loans. Variable can be a little bit challenging, just given that, again, depending on the terms of the loan, if the variable rates, if interest rates go up, that means the cost of borrowing that money to invest in your future will also go up. And so you have to be mindful of, gee, what are the rates and how far could they possibly go up if they're variable, so that you don't end up hurting yourself by ending up paying more money in order to cover the cost of borrowing the cash. And the other thing is as well is you want to be smart about your cash, right? So as you're generating cash, either by working or credits, let's just say from tax returns, whatever it may be, the best thing you always want to do is pay down that loan as soon as you can, particularly if it's interest paying, meaning you have to pay that interest every year. And the reason why is the faster you pay down that loan, the less cost, i.e. the interest, that you actually have to pay on that loan. It just makes a lot easier because at the end of the day, the money that you put in a checking account or a savings account, you actually earn a little bit amount of interest, but it's nothing compared to the amount of interest that you would have to pay if you in fact if you're borrowing money, if you're loaning, or if you're borrowing money in the way of a loan. So you want to be mindful of that and just being smart about your cash flow and using it to pay down the loans when you have to. But at the end of the day, you just want to be mindful of your costs, your tuition, but also if you have excess cash and you can pay down some of those loans, great. If not, that's fine. That you usually will wait until after your college careers. Now, I can tell you from personal experience, I never really needed a loan. I was very lucky by virtue of my family and working. So you'll see the last bullet point, take what you need, not what you want. I was very fortunate in that I didn't have to take much of a loan in order to pay for my education. I could have obviously have taken more, just given where I was and the opportunities here in terms of all these different types of loans, but I decided that it was best to only take what I needed so that I didn't have to worry about this debt that I had to pay off along with interest. So just be mindful of that and smart about the money that you're borrowing, because at the end of the day, you've got to pay that back with interest. So any other comments there, Tanya, with respect to loans?
Yeah, I was going to add that don't be hesitant in taking out a loan if you really need to pay for your education. I put myself through school to get my bachelor's degree, and in doing so, I needed to um, take out a loan. And I did, as Dominic is saying, that I only took what I needed and not anything more. But it was a big investment in my future, and so don't be hesitant, but be smart about it, right? Do your homework, make sure you understand what type of loan works for you, and then, like Dominic said, plan ahead and be prepared to start paying it as soon as you graduate. So
Great.
with that said, you want to go to the next slide? So credit cards, and every time I see this slide, I don't know, Dominic and I have done this presentation for, I think this is our third time. It always makes me smile because I think about my first week or so at Cal State Fullerton, and we were bombarded by credit card companies. I recall the number of applications that were being passed out to us. So just be aware that you need to, one, be cautious about, accepting the credit cards. But credit cards are not all bad. I think some people think so because they hear about the terrible situations that a number of people get into. But you need to build your credit, and so credit cards can give you that opportunity to do so. But it's very, very key is to pay your credit card on time, right? You need to pay at least the minimum, and more than you need to pay more than the minimum so you can get the balance down. And the reason for that is because by paying timely, and you're building your credit and you're building your FICO score. Your FICO score is going to allow you later, if you have a strong FICO score, to be able to buy your first car, to buy your first home. So your start with the credit cards, and that may be your start with building your credit, is going to be critical for you for the rest of your life. As you start to build your credit, you'll want to check with their credit reports. And so the website is on here, annualcreditreport.com. You want to check that regularly. So I mentioned that I am in our cyber risk services group. One of the areas that we look at is how people can protect their personal information. And we recommend people to check their credit reports just to make sure that nothing has been tapped into. I'm sure a number of you hear, the stories in the news around, credit card companies or banks, are being hacked. And so you want to make sure that your personal information is well protected. So always checking is very good. So be smart, research a lot of the credit card terms. There will be, an insert in the credit card that will have all the details around what's related to those terms, with the interest rate, the payment requirements, as well as, sometimes they try to trick you and say you can pay 0% for 6 months, but really read those details because those can have a very high interest rate after the 6-month period. So Dominic, would you like to add anything to the credit cards?
No, I think that's right. I mean, I think you have to just be smart about it. I think the next slide will say it all. So I'll let you go ahead.
Okay, next slide. So the credit card slide, and I hope you can see this, but wanted to point you to a few key areas on the slide. So if you look to the top left-hand corner, amount borrowed. So say that you borrow $500 on your credit card, and it has an interest rate of 22%. So you're paying, monthly the payment amount of, $25. You'll see as you start paying in September 2012 and you end paying in September 2014, 2 years, you will end up paying $114 on the $500 that you borrowed. So as opposed to just paying $500 back, you end up paying $614.33 over a 2-year period. So, go ahead.
No, I was going to say, so that's the key, is that it's very expensive, using a credit card. I think that the end summary here is really only use a credit card. And again, you will get bombarded, just given the purchasing power that you will have in terms of post-education, term when you have a job and you can pay these down. But an interest rate on a loan is much lower than the actual rate that a credit card would charge for using their credit cards. And this really goes to show that if you're going to use a credit card, be smart about when you use it, how you use it. I would really only use it in emergencies, to be very, very blunt, just given that the interest rate can really accumulate. But most of all, pay timely. Don't let any interest get charged. Make sure you pay when the payment's due, so that that way you're not going to accumulate these large charges.
Good. Thank you, Dominic. Next slide. So now budgeting. So we talked about 2 elements of budgeting. One is money coming in, student loans we covered, but Dominic mentioned he worked while he was going through college. I worked as well while going through college. You'll have, financial aid. You may receive financial aid. And then your outgoing amounts, right? So we talked about if you get a credit card, you need to make sure that you understand and you pay more than the minimum payment. So with all that said, you want to build a really strong budget or a reasonable budget, right? So have a good understanding of the money coming in and then detailed on what's going out, right? Oftentimes people create a budget and they're thinking that they're going to be aggressively saving, but they forget the details in their budget, and they still run short. So think of logically in terms of what should be included in your budget, and then target, that budget and make sure you're sticking to it. If you can increase the amount that you save, that's great. And this last one, I would say, think about what you're going to need later, because as you transition from college into the workforce, your needs then are going to be different. Yes, you're going to make, hopefully a lot more money because you've invested in your education, but there will be some immediate expenses that you will need to pay for. Professional attire, depending on what field of business you go into. I just recall when I graduated having to get, my first few suits so then I could be prepared for day one. Reliable transportation, I think, is an important one. You want to make sure that you're on time, so you want to make sure that are you covered in your budget, whether it's, you're taking a bus, you're taking BART, you have a car, whatever that case may be. And then, again, please repay your student loans as quickly as possible. And next slide. So this next slide gives you some examples of what you would include in your budget. And I will just point out a few things that I think people tend to overspend, right? Particularly, a meal plan, while you're in school and versus dining out. Oftentimes college students have a meal plan, but then they eat out as well. So you should consider what makes sense to you in terms of what's in your budget. If there are some times that you want to go and dine out, then work that into your budget. But be realistic in terms of the amount of money that you're bringing in. Recreational, that should be part of your budget as you're thinking through how much would you spend per month for recreation or entertainment or hanging out. One area that I think I always smile when I talk to, high school students or college students around, just clothes and sundries and, if you want to pay to get your hair done, you need to include all of that into your budget because oftentimes that will creep in there and you hadn't really planned for that. So think about all of the elements of your budget and then always include savings. So Dominic, would you like to add anything?
No, I mean, I think that's a great summary. I mean, again, I think the key thing is, and especially given today's time frame, that there's all different types of tools that are out there. Excel-based, other internet. There's, use any one of the budgeting templates that are out there. Sometimes as you're putting a budget together and you have this blank sheet of paper, you may not have this slide deck in front of you in order to look and say, okay, what are the different types of things or costs that I need to consider budgeting? But so, using some of those standard templates that you can find online, Excel, Microsoft Excel has its own standard. They'll actually have some examples of different types of expenses that you may not be considering that you could use as part of your budgeting process. And I think it's something that, take advantage of those tools, use it. I've talked to quite a few students as part of, some of the extracurricular things I do is I do talk to high school students that are looking to go to college. And when I do talk to them one-on-one, we do talk quite a bit about budgeting and understanding, again, geez, how do you think of all the possible expenses? And again, using some of those tools are actually pretty helpful. And again, as you're budgeting, the way you should always think about budgeting, and this happens all the time, is don't budget to break even. Meaning, if you're earning income and you're earning, $500, $1,000 a month, don't budget so that you're spending $1,000 right away, so that you're break even, you're spending everything. Really try to be as good as you can about saving. Putting aside extra cash. So if you're going to budget for really what expenses you need to pay, so that anything that's left over is gravy. You could put that into your checking and savings. You hold it for a rainy day in case you actually need it as an emergency.
Well, thank you guys so much. This is Sonia from PCA. We did have one question come up. A student wanted to know what is a realistic, decent credit score when you first start out, and where do you want to be when you finish college?
Oh man, that's a tough one. Tanya, do you know, I'd have to think of for a moment here in terms of credit scores when I was younger. Do you know how that works, Tanya? Do you remember?
No, I don't. And I would say I wouldn't want anyone to follow in my footsteps because I didn't attend a program like this to know that I should be looking at that. Because I know you need to build it over time, right? So I don't know if you start in the 600s or so and then you build up, or if you start higher.
Yeah, my recollection is you probably do start around the 600, but I could be wrong. Don't quote me on this, but I think you can get. I mean, now with my credit, so I'll put it in context. So I think the highs that you can get into is I think it's about the 850 range. Is that right, Tanya?
Yeah, that's
850,
correct.
860. That's the really high end range. But you're not going to start there. You actually have to work up. And the way you do that is you pay timely your credit card bills. You pay to the extent that you are using them. Any other electricity bill, all the other things, the bills that you're paying. If you happen to have a car payment, any types of loans where you have to pay today with interest. As long as you're making timely payments, your credit actually continues to build from there. So I don't think you start from a zero, but you definitely start kind of middle of the road, 500, 600, and you just kind of work from there. Again, don't quote me on where you start, but you do build up to it, but it does take time. And again, as long as you're making payments on time, I will say that it's a little bit tricky. I've noticed that my credit score has gone up when I am a good customer from a credit card standpoint. When you actually pay interest, they like you because you're actually making the credit card some extra cash, and so I have seen my credit score go up by that, by virtue of that. But don't get into that habit. As long as you're paying timely, it'll continue to grow.
And with that in mind, I remember that I wanted to mention around the credit card slide is don't close your credit card accounts. So if you open it, you've paid it off. It looks good on your credit report that you have one open and you have credit available to you, but you're not using it. That's demonstrating that you are managing your credit appropriately, and that too will help your credit scores go up.
Absolutely. But again, don't worry so much about what your credit score is today. I think if you just get in the good habit of paying timely, it'll all work itself out.
Yep.
Guys, we actually have another question around the same topic. What's better for building credit, taking out a loan or signing up for a credit card?
My experience has been, I hate to say it, but it's actually both, because if you can manage both, then that shows that you're a responsible individual financially. And again, if you're only borrowing what you need and spending on your credit card what you need, that really shows. And you can use two methods for actually borrowing. That really shows that you're a responsible person. But again, don't focus so much on the credit score. I don't think there's one or the other that's better in terms of credit card versus the loan necessarily. I think the key is to only, if you can, use one or the other, not use both, just because I remember when it was like to be young. Gosh, if I could use a credit card, why not? It was just that impulse. If you're really good, then you maybe you can do better than I did and do both. But don't focus so much on which one would be more beneficial in terms of the credit score. I think just focus on being responsible if you do decide to go down those two routes.
Yeah, and I would say I agree with what Dominic said. I would also add that, if you're considering, you should not be considering a credit card versus a loan to increase your credit score rating. You would be thinking about that if you have an expense that you need to pay, right? So back earlier we were talking about if you're going to take out, student loan or, using a credit card, one, you're only taking it out because you actually need it, right? You should not be just going out to take it just to increase your credit score. So with that said, if you need, a certain amount of money, the loan may make sense to you versus the credit card. But, be smart with it. Understand why you need the money and then make that decision. And as Dominic is saying, always pay timely.
Yeah, and again, so to summarize, just to be crystal clear, the focus should always be pay timely. If you're borrowing on loans or using credit cards, the end result will be your credit score will go up. It'll get better because it shows that you're financially responsible. And that at the end means as you're looking to, as you generate wealth or you earn more money, as you actually, you've now graduated and you get your job, it'll make life easier if you're trying to buy a car, buy a house. That's when your credit score comes in, but that's years down the road. But you want to set yourself up for success early on. So the gist is just be smart about when you borrow and when you use your credit card, and everything will fall into place in terms of your credit score.
Well, great. Thank you guys so much for taking the time and presenting to our group. I don't think there are any more questions coming through, but I want to thank you, Dominic and Tania, for your time. And for the rest of us listening, hope to talk to you in 3 weeks for our last and final hangout. Good night, everybody.
Great. Take care.
Good night.